Let's now look at order flow and what goes on at and around a key level. So we have a key level in the marketplace, and around that key level we have a stack of orders. Okay, now we have sell orders below the level, at the level, and just above the level, and then we have buy orders stacked above the level. So essentially what's happening here is if price is approaching from the bottom, okay, and it's approaching a key area of resistance for the first time, especially if this area hasn't been seen for a while, you have a lot of orders stacked around at different zones. Okay, remember, institutional traders are trading massive size. They can't just click sell or buy and put their whole position into the market at once, just because there's not enough orders at that area. Okay, so we'll discuss something called accumulation of orders shortly, but just understand that they're not like us sitting at home where they can just click buy or sell and all their positions get filled, okay, at one price. So essentially you have orders stacked up around key areas, and the longer prices stayed away from an area, a key area that is, the more orders you're going to find stacked up. Okay, so just understand sort of the essential characteristics of how these orders are stacked. So you've got your sell orders stacked around this area, and then you're going to have your buy orders. Now your buy orders are going to be made up from your stops, okay, your stop loss. So if you're selling around a key area of resistance, for example, you're putting a stop loss sort of just above that key area, right? Now essentially a stop loss is a buy order. Okay, so if you're selling, you need to buy back the position or close the position by buying. Okay, so essentially it's a buy order, right? You've also got buy orders in terms of breakout traders above the level. All right, so that's going to have implications or an effect in the marketplace, that if price moves past a certain area of the resistance level, then that's going to push price higher. Okay, so let's see what happens when price sort of approaches these areas. So you have price approaching a level, and you have sell orders hit. Okay, once those sell orders get hit or come into the marketplace, here again I'm talking about limit orders more than orders that are actually resting in the marketplace here, because you never know what's going to happen in terms of people actually hitting market orders. They're going to come in at any time they feel like. This is really around limit orders. So you have price come up to a level and hits those sort of first block of orders, and what happens is price fades. Then you'll have price come back up into that area, and you can see now we've actually hit the key level, and you have more sell orders coming into the market or getting hit, and you'll see price fade again. And then if the orders are not big enough, okay, you may have price have up sort of a third or fourth time into that area, once again just picking up more orders. And this is sort of an accumulation of a position. Remember, the large institutional traders, they'll come in, as I said, not at one specific level. They'll try and stack orders at different levels like this, or put them in sort of bunches, okay, so that they don't drive the market down. If they had just had one big stack of orders at one level and they push sell, what's going to happen is price is going to drop off, okay, take out orders below, and if they want to add further positions, they're going to have a worse fill. So in order for them to get the best possible fill on their position, they will drive price up, okay, and you can see what happens. Okay, obviously we've got a larger picture here, but what happens around these highs? Okay, the same thing, essentially what I've drawn in the larger picture. You're going to have stop orders. Okay, so if you sold in here, for example, you're going to have stop orders and buy stops, okay, around this level, and that's essentially what the institutional order flow, what the institutional traders are looking for. They're looking for essentially retail stops. Okay, so remember, if you're selling around here, you're going to put a stop loss above the high. Same thing here. If you're selling in around this area, you're putting a stop loss over here. And that's essentially, what the professional traders are looking at. They're asking themselves, where are the stops placed? Okay, they need the stops, okay, for liquidity, all right, because they want the best possible price. So just think about it in terms of, we want the best possible price, okay, and in order to get that, we need to go where the liquidity is in the marketplace, and essentially that's where all your stops are going to be sitting. So above these highs. So once you've got this accumulation going on and they're building up a position, once again, stops, break it, buy stops, okay, sitting above these areas, price will fade, right? So once that essentially happens, you can see we're actually sort of filling at different areas here, and you'll very often see this will kind of form like a wedge kind of pattern, okay, which is quite a high probability pattern. I haven't gone over those patterns in this course, but if you've traded wedges before, you'll very often see that sort of effect. The same as with your 3 drives pattern, okay, also a harmonic pattern. That's essentially what it is. It's picking up orders or accumulating orders at different levels, okay, and that's essentially forms your support zone, okay. Remember, we talk about zones and not particular levels. That's essentially why, because we've got price driving in at different areas, okay, accumulating positions, and that's really why we're marking off zones and not specific numbers. When price drives higher, okay, remember these orders here, okay, once they get taken in, there's very few sell orders. So eventually when price comes back up to that area, there's not many sell orders left. And essentially what's going to happen is you have these stops here, okay, so if you accumulate stops, sell orders, sorry, positions here, and price breaks through a certain level, that's going to trigger stops. Now essentially your stop, okay, if you're selling, is a buy order. So you have your buy orders in terms of stops, as well as your breakout traders, okay, stacked above the level. And once that gets hit, you're going to have price push, okay, a lot higher. All right, now, if there's not enough orders there, or enough interest to push price or continue with a strong uptrend, what's going to happen is price is likely to come back, okay, to this area. So what actually happens around this level right here, okay, if we think about it in terms of order flow, we have, once again, we have buy orders, okay, stacked up from fresh buyers, okay. We have buy orders from previous sellers. So remember, if you accumulated short positions here, if you didn't put a stop loss in here, okay, when price breaks above and it comes back, okay, you're essentially buying, okay, you're clicking buy to get rid of this position. So there again, you've got buy orders from those sell orders here, and then you've got buy orders, okay, from newer sellers taking profit. So if there was a key area of resistance up here, for example, and we had sellers coming to the market, they need to buy back that position. So once again, you've got accumulation of buy orders at this area here. So essentially that causes that resistance becoming support, that price flip we spoke about, okay, and you've got a high probability of price moving off that area. So that's essentially the essence of order flow and how the institutions come in around these levels and how they use those levels. And that essentially forms these key areas of support and resistance. Okay, so remember, they are zones and not specific numbers.